Asia's next great infrastructure arbitrage opportunity is being built through the Singapore-China Chongqing Connectivity Initiative, a four-pillar institutional platform that is rewiring how trade, capital, and connectivity work across Western China's 360 million population market. Now entering its 11th year, at the start of January 2026, the CCI has scaled into a US $26 billion platform connecting sovereign-backed policies with major infrastructure and sophisticated capital, with Chongqing as the inland hub and Singapore as the financial and regulatory gateway. For institutional investors, that means a live, de-risked arbitrage opportunity between saturated coastal and OECD markets and underpenetrated inland growth that is now becoming ripe for investment. The first of the four pillars is financial connectivity. Singapore's position as the leading offshore RMB center now converges with Chongqing's emergence as Western China's key capital hub. Supported by RMB clearing bank designations, digital RMB pilot schemes, and deepening cross-border bond markets. Together, these developments are opening a new wave of investment opportunities across fintech, private equity, and infrastructure financing. The second pillar is the land-sea corridor. The new international land-sea trade corridor links 555 ports in over 75 countries via a multimodal spine that has seen container volumes grow nearly tenfold since 2019. With new 12-day services into Central Asia and single-window customs that compress transaction times, this corridor is converting geography into yield across terminals, rail operators, and digital logistics platforms. The third pillar is aviation. Traffic between Chongqing and Singapore has recently expanded from 5 weekly flights to 24 daily, supporting over 220,000 passengers annually within a 136 million passenger Chengdu-Chongqing hub ecosystem. This growth underpins cargo demand, aircraft leasing opportunities, and hub-based network strategies anchored in Western China's export-led manufacturing expansion. And finally, the fourth pillar is information and communications technology innovation and digital infrastructure. The Joint Innovation Development Fund has been tripled to RMB 100 million, signaling a strategic understanding of the importance to seed the proof-of-concept stages for the digital new international land-sea trade corridor. Every successful pilot it backs is a potential precursor to hundreds of millions of dollars of investment in data centers, cloud platform, and grid investments, which will necessarily be financed by commercial balance sheets and institutional capital rather than grant money. Beyond the four pillars, healthcare, advanced manufacturing, and the digital economy are reinforcing the thesis. The perennial healthcare city beside Chongqing East Railway Station and manufacturing exports like Qingling Motors' Singapore entry, plus talent academies for corridor logistics and trade, all point to a replicable, policy-aligned growth template. So far, the CCI has yielded 347 projects, $21.8 billion in cross-border financing, and 33 institutional innovations, making this an initiative that major investors and capital allocators should not and cannot ignore. Deployment vectors range from infrastructure bonds and logistics equity to strategic partnerships and sector-specific funds, all supported by vice premier level governance that delivers real regulatory innovation. If you are responsible for allocating capital into Asia's next chapter of structural transformation, the window to treat CCI as emerging is closing. To understand the architecture, numbers, and concrete transaction pathways behind this platform, we encourage you to read Paul Brooks' highly detailed article called Infrastructure's Next Great Arbitrage, available at paneuro.co.uk/articles, and contact us to discuss how you could engage with CCI stakeholders and participate in this enormous opportunity. Thank you, and bye for now.